Well, good morning, GoPro traders, and I hope that you had an awesome weekend. It's time for our Monday morning market review with yours truly, Ian Giffen, and GoPro Trading Academy. So, this morning we're really just going to run through a few things that happened last week. To be honest, I think the theme of the markets at the moment is pretty pedestrian. Mostly yen weakness off of the back of the previous bad news, I think, on the US dollar jobs report. No surprise there with a liberal president. But in any case, we don't mind as long as we get our trading opportunities and there's enough volatility in the market for us. We don't really care where it comes from. So just to kick off then, as always, with the Euro US dollar on the weekly time frame, very little change last week, as you can see, just a bit of a low test, closing almost where we opened. Just in a bit of an overlay over there to see what happens, but nothing really doing on the euro at the moment. You'll see even here on the daily time frame, we've been pushing up against that previous resistance level. Did it again. Well, I think last week when we last had our market review, we had just seen a close outside of the channel, but as you can see, it came straight back inside. But it's testing that resistance level again. So interested to see what happens there. Obviously, if the dollar weakness continues, which it didn't through the course of last week, obviously until Friday, then we may well see a nice breakout there and something tradable in a bullish direction. Certainly with our lower time frame core strategies, but not really anything else, to be honest. Moving on to cable, weekly time frame. Here we had some more action. Obviously, you can see that nice bullish impulse candle on the weekly time frame. Still very much inside of our channel. There's no WM pattern here, so nothing to be traded in terms of anything like a daily impulse. Although the picture here is pretty perfect in many other respects, where you can see we did have that previous breakout with the dollar weakness, but combined here with a bit of additional strength on the base currency being the pound. But last week, that retracement here coming back and bouncing beautifully off of the support area, and on Friday giving us that impulse candle as well. So definitely something for us folks who are trading the impulse strategies on the lower time frame. This is for sure something that you should actually be looking at. And if we actually drop down to the 4-hour time frame, if you were trading a hybrid type strategy and you'd seen that breakdown on cyclicity on Friday, you'd already be into a trade on this. But that's something that we're still going to be talking about more in the future for most of our members. So really what you're looking for is a pullback, which we've had this morning, and then a bullish impulse candle. So in 57 minutes or so, we'd be interested to see what this picture looks like for those of you trading H4 impulse. Moving on to dollar yen, little change here in that picture. The previous week we did have a bearish candle, but it had still made that higher high. So last week we had another higher high, and obviously it also is a nice bullish candle, even if it's not an impulse candle. Nevertheless, this picture remains bullish. We are still in a trend here on the weekly time frame, and technically we are still in an impulse or phase one wave of that trend, although it is still potential at the moment. Remember, we need to have a close above this previous wave high during the course of this wave in order for this to confirm itself as an impulse wave, and also based on that going from a potential trend to an established trend. As always, folks, remember there is the chat box for you to drop any questions that you might have into. And if you're watching this as a recording, please do use the comments below. Right, so looking at this then on the daily time frame, inside the channel, that deep retracement that we had hasn't been followed up with anything else for us to actually make much use of. We did have an overlay last week, which went straight to take profit. What was that, on Wednesday? But apart from that, this is very much inside of the channel, and there is no valid WM pattern. And even when it comes to looking at LPO channels, there's nothing really for us to do there except treat this as a ranging market, and that's very important for you guys to know As always, the difference between a trending market and a ranging market at a conceptual level is extremely important for you to understand so that you can select only the appropriate conditions for your strategies. All right, dollar Swiss here on weekly, nothing really changed. Very similar, obviously, to the Euro USD, but just an inverted picture with, in this case, a high test. So no real difference for us there, but that extended bearish movement, obviously, on weekly looks like this on daily and very much in a trend on this time frame. So although we wouldn't be, just going back to weekly again, although the conditions here are in no way appropriate for us to trade our daily impulse strategy, obviously on the daily time frame, this is a perfect picture for us to be trading on the H4 impulse. So you can see how we've had that extended bearish trend now for quite some time. We spoke last week about how it was continuing. We did have that retracement during the course of last week, but obviously then subsequent to that, we've had a potential continuation of this trend. Again, it's not a confirmed phase one at this point in time, but given the definition of a trend, we are able to treat this as a potential phase one or impulse wave and trade it accordingly. So again, this morning we should be looking for a setup for us to be able to go short post a pullback. We have had that pullback this morning. So again, let's have a look at what this looks like in now 53 minutes time, because it's definitely a potential trade for us on the H4 impulse. Now, remember, folks, when I talk about this, especially for those of you who are not that familiar with our training at GoPro Trading Academy, these questions are all probabilistic in nature. So we understand that we don't actually know what's going to happen next in the market, nor do we need to. It's a complete fallacy that that is possible, short of owning a real crystal ball. It's absolute nonsense. So, we apply the three pillars, which are obviously the most important one of those is convexity, and we work our edge using the law of large numbers. And over a period of several trades, or the law of large numbers comes into play, and we are consistently profitable over time. So when I show you potential trade setups on any day, or when we discuss them in our coaching, I hope you understand very clearly that I'm not predicting that a trade is going to be a winner, nor do I need to. But I do know that after 10 or 12 or 15 trades, or sometimes just 2 or 3, we are making good money. So the important thing there is to give yourself a chance to do that. Right, so on USD Cad, again, very clear picture here on a weekly with that USD weakness compared to Canadian dollar strength that has kept this in a nice bearish impulse wave on the weekly time frame, which of course means that the conditions continue to be appropriate for us to trade the daily impulse. So we had a very nice daily impulse that hit take profit on, that was the 10th. Yeah, so hit take profit on Monday. We must have discussed this last week. We had that again, that same pullback that we've seen across most of the majors and minors during the course of last week. And then Friday coming down and closing just on the low of Thursday's candle. So that's something that I know a lot of folks have already taken as an entry for a daily impulse today. So nothing wrong with that at all. Just obviously manage that trade to conclusion. But very clearly a bearish trend, both on a weekly and on daily, which means that this can also now be traded on the lower time frame for H4 impulse. And here we have that pullback again, looking to see what happens in now 51 minutes time. So if we get a bearish impulse candle here, perfect setup for us to go short. Just watch that correlation, because you can see there's quite a few pairs stacking up for us. All right, so moving on to the last two of our majors and minors. The Aussie on the weekly, very little change. We had a bit of volatility, obviously, during the course of last week. But here on the weekly time frame, you can see it doesn't really change anything at all. We did have that low ringed, and it's also made a higher high. So we're definitely into a bullish wave here. But nothing doing on that time frame. And as you can see here on daily, that bullish breakout of the four-wave channel turned into absolutely nothing, pulled straight back inside of the channel. Nothing for us to do here at the moment at all. Similar picture on the Kiwi, as you can see, on the weekly, very, very similar picture. Difference being here, we are actually into an overlay that we would have discussed before. And here as well, you can see same kind of picture as we just seen on the Aussie, deep inside of channels here. We didn't even get a breakout last week. So that's also nothing doing. We might be looking certainly at bearish overlays here in the next day or so, even potentially tonight. Right, moving on to our yen pairs. And as I mentioned, the theme at the moment really is yen weakness. And here on the euro yen, it's been going for quite some time on weekly. So we're now into our fourth week outside of the channel. This has been very nice for a daily impulse. You can see this trader has been trading it using advanced targeting, and they've been in it for a while now. But in any case, even if you were just using standard targeting, we're just waiting for it to come up and hit that take profit level. We're already at break even, so you don't need to think about doing anything else here at the moment. Of course, that does also mean that the conditions are appropriate and have been appropriate for H4 impulse. We got into this one. What is that? On the 14th. So that is Friday. So Friday morning, early, we got into this. Already got to break even. Almost got to take profit. Doesn't quite hit it. Might get there, might not. Whatever. We don't care. But it's already a risk-free trade. So we're perfectly happy with that. And you'll see that across the board here on our yen pairs, we're now seeing some action. Last week, we spoke about the fact that we hadn't yet had that breakout. Well, we've certainly had it now. And here on the daily time frame, as soon as we get that bullish impulse candle after the current pullback, conditions will be appropriate for a daily impulse. So very nice indeed. Remember with the inside bar on Friday as well, giving us an isolated low from Thursday, and it's also a bullish impulse bar. This can also be traded in a bullish direction on H4 impulse. If you're trading hybrid, you'd be into it. Actually, we did have a shot at it last week already before we got the pullback, and this one got stopped out. So this was not a successful trade. And having said that, you would certainly have been at break even, obviously, with these higher closes. So actually, no, that's not the case. Let me point this out quickly. I'm just wondering why we got stopped out for a loss here, not break even. It's because we didn't, in fact, get another higher close. This was a lower close. So there was a bit of a gap between these two candles over here. And as a result, this close is in fact lower than that close. So despite the fact that they both look like bullish candles, which means that in the 3-6 rule, we kept it at 6 candles and we actually got stopped out just there. So that's the way it goes. We don't really care. Moving on, looking for another potential setup on this one. Right, so Swiss yen here on weekly again into our fourth week outside of that four-wave channel. Also in a daily impulse that's already at break even, which you can actually, let me just rather go to the appropriate chart. So there you can see it also gotten pretty close to the standard target. We're still in this trade looking for that, obviously, to hit that take profit. And if it closes above it, obviously, then this trader will be able to start trailing their stop using advanced targeting. On the H4 time frame, obviously, those conditions have been appropriate as well. This is another one where I think 1, 2, 3, 4, 5, 6. Yeah, so this certainly this stop, if you were trading H4 impulse, you would have already trailed to below that low using the 3-6 rule. We've got a similar situation here where it looks like we've got 3 higher closes, but in actual fact, it's not. That is a lower close. Close, but didn't happen. All right, so let's see if we survive this pullback or not. And CAD yen, another one. Obviously, Canadian dollar strength was visible on USD Cad. So that's also been going for a while. Let me just get this to the daily time frame. another daily impulse that is already at break even. If you were trading standard targeting on this, it would have hit take profit on Wednesday, I think it was, but that also would have been a setup to go long again on a daily impulse. So that is something that you may have done. So also bearing in mind the fact that when we had that bullish candle last week, Wednesday, it would have been appropriate conditions for an H4 impulse. You can see going back, I think that's already the 5th. So moving on through the week, you can see there's actually 1, 2, 3 H4 impulse trades that have been around. Unfortunately, with the way this one's been going, even though it continues to be bullish cyclicity, you'll notice it's weak cyclicity, where it's kept on encroaching on the previous retracement waves price territory and not really respecting what was resistance as support. And so this one got stopped out at break even, unfortunately, got pretty close to its take profit. This one, 1, 2, 3, 4, 5, 6, is still the appropriate stop level here, but and it's come pretty close to the break even level. But as soon as this candle closes in now 43 minutes time, the stop on this will be trailed to below that low. So it'll be almost at break even. And if it survives that, we will be at break even using the 3-6 rule. So, you know, we're hoping that obviously that'll continue and give us a winner. But even if it doesn't, you know, we had a break even trade here. We had a winner here on about 2.8 to 1. Even if this had been a full loser, we'd still be 1.8% up. Despite the fact that it was a loser. And if you look at the previous H4 impulse, 1, 2, 3, 4 of these, that one winner will actually pay for everything, even if this one gets stopped out right now, and we would still be in profit despite the fact that we only won one trade out of these 4 H4 impulse trades. And that, folks, again, is convexity at work for you. Right, so just a quick question from Surprise. So good one as well on how many trades can we have against the yen to control risk. So you folks should always remember our risk management approach is that we don't want to have more than 7 risk units open at a time in total across all of your trading pairs. And if you've got one currency involved, like the yen, then you shouldn't have more than 3 open risk units at any point in time. Now, obviously, if you're using trailing stops as we do, and you are removing risk progressively as you manage your downside to 0, that does mean that you're opening up your risk budget again. So the number of trades can be more than that, obviously, because as you can see, especially with this trader, all 3 of their trades are already at break even, which means that they've got their full budget, risk budget available to them. So the total number of trades can vary. Muna said USD Cad did not take the trade because Friday's candle was an impulse candle. Conservative approach, that's absolutely fine, Muna. Quite right. No problem at all. Conservative is good. Right, so Aussie Yen here on a weekly time frame, it tested that resistance level. And as you can see, it didn't break through on the weekly time frame. So nothing doing for us when it comes to the daily impulse or our daily strategies. You can actually see that weakness here on the daily time frame, where that retracement wave last week came back inside of the channel, encroached on the previous retracement wave's price territory. Friday did give us an impulse candle and a potential impulse wave. Folks, this is still technically a trend until proven otherwise, because we have had that breakout. If you are only a channel trader and you're not looking at the WM patterns or valid WM patterns, then we did get that close outside on Friday. However, and we're talking H4 impulse here, if your setup is inside the channel, if your entry is inside the channel, it's still no go. All right. So even if we did get after this pullback a bullish impulse candle, but it was inside the channel, and you can see the top of our channel boundary here. If it fails to, if it close outside of that channel, then it's still no go. All right, so just be a bit cautious on that one. And you've got plenty of other yen trades to look at here, so I wouldn't bother with that one at all. You're welcome. Surprise. Okay, so the last of the yen pairs on weekly. Obviously, we've spoken about this before with this very slow, stately, bullish impulse wave, and it gave us another higher high, higher close, and higher low. So definitely a continuation of this impulse wave last week, or potential impulse wave. Actually, no, it's now confirmed itself just as an impulse wave with that close outside. So technically now we are in fact in an impulse wave on this. We've been in it technically, but now it's confirmed as an impulse wave with that higher, higher, higher close. So yes, it is still valid for that daily impulse. Friday we did get that bullish impulse candle, which means that it's a go for this on the daily impulse. Now we obviously had a lower open during this morning, which means that if you were going for this, your initial risk on this is going to be lower, which is nice. We were already looking at an ATR stop because of the size of, the distance of the pips at risk from the close on Friday through to the fractal. But just assuming that that's our standard target, it's pretty much around that. That would be the setup. So it's still weak, folks. You know, we've had, look how many we've had in a row. 1, 2, 3. This is the fourth one in a row, and none of them have actually made it. So, you know, it is what it is. That's just the way the cookie crumbles. So let's see if this changes its tune through the course of this week, but maybe not. You know, maybe now that we've come up to this resistance level on weekly, even though it closed outside of that, it might be a failed test and it might roll back inside of this and give us a, you know, obviously we need to update our channel boundary if we get an isolated high over here at the end of the week, which means that we would have new channel dimensions, and obviously that would be inside of the channel and would be almost a breakdown in cyclicity, but still showing huge weakness on that one. All right, so as I said, there's much more attractive yen pairs to trade. I wouldn't worry about either of those. Okay, moving on to our euro crosses, euro GBP, still nothing really to interest us here. We did have a bearish impulse candle last week, but there's no cyclicity, still inside of that channel. And doesn't matter what channel, basically, LPO, HDC, no WM patterns. When we saw that bearish impulse candle on weekly, really it was just this bearish move that came down and tested the support level of our HDC channel. And it might just have closed outside of it there on Wednesday, but it's pulled straight back inside of it. So significant weakness. We actually discussed this in one of our trading sessions for the, I think it was for our funded account members last week, talking about a potential M pattern here. Yes, it is still at the moment an outside C close. So if this rolls over and gives us that an isolated high here, with this valid outside C close, then fine. But if we get a close inside of that price territory, it will be invalidated. So Dina, this is all on daily. This is a daily 4-wave HDC channel. The weekly channel is much wider. So we're not interested in anything on the daily time frame. This M pattern or this breakout of the channel would purely be for H4 impulse trades. So for those of you who are trading WM patterns, that's that. Yeah, the color is irrelevant. So I use red for the 4-wave channel and blue for the 3-wave channel for the continuation strategies that some people are familiar with. But if we're focusing on the impulse strategies, then just look at the red bars, ignore the blue ones. And the older ones you can also ignore. That's a future training topic for you guys. Right, so keep an eye on that. But as I say, you know, we've got much more interesting stuff to trade as well. Euro Swiss on weekly, nothing, of course. That's just a waste of time. However, on the daily, as we discussed previously, we did have that preceding breakout the week before last. Last week, it did come back and test that again, but it pulled back on Thursday and closed outside. So, you know, outside the 4-wave channel here, you know, I'm not a fan of the the Euro Swiss franc, as you guys know. It's my least favorite trading pair. But nevertheless, there was a setup to go short for some of you over here, which you could have done. And that is still going, but it's just languishing, obviously. So I have no real hopes for this trade at all. Definitely not an instrument that I like trading. The euro and the Swiss franc over the long term are highly correlated because of the fact that they share a common trading zone. Right, moving on to Euro Cad, which is also my second least favorite. Weekly, yes, we are outside still. We spoke about this the last couple of weeks. Both of these have been low test candles showing what must look like weak cyclicity on daily at the very least. And in actual fact, I think last week you'll see we had a breakdown in cyclicity. Let me just confirm that. The close here, 48.1, low 48. So yes, by 1/10 of a pip, we did actually have a breakdown in cyclicity here. Therefore, whatever trend or potential trend we might have had previously has in fact broken down. So nothing doing there. We did have that previous, no, we've still got it. In fact, it's a daily impulse. That's right. So after that pullback here, we had a setup to short this. We're still trailing the stop on that. There you go. So using the 2 5-step rule, 1, 2, 3, 4, 5. There we go. 2 5-step rule. That is where the stop is at the moment on this one. So some way to go. And also with this bearish move that we had last week, there was also a setup for an H4 impulse, which actually did hit take profit on the standard targeting. And if you're using advanced targeting, it would have stopped out at break even. Right. So that's Euro Cad, second least favorite, but at least it got us a winner on H4 impulse last week. Euro Aussie, nothing. I mean, that on is as flat as a pancake. Still no change there. Last week we saw it test the resistance level. It was an overlay setup for those of you who are interested in that. That overlay is not looking particularly promising at the moment, but that overlay would have actually been for those folks who are looking at it. Yeah, that triggered on Friday. The stop actually should be moved to above the high and the tighter take profit as well. All right, but we're not going to belabor that point. Euro NZD, also absolute rubbish. Not interested in this at all. Couldn't do a bullish overlay on this previously because it was a bearish impulse wave. So there's nothing at all on that one. Moving on to our GBP, remaining GBP crosses on a weekly. GBP Swiss and Euro GBP, you can see it's almost a, well, it's a mirror image. Nothing for us to do there. We had a bearish overlay on the daily time frame because it did test our channel boundary. So that went straight to take profit on Thursday. So that was a nice one. In fact, we had two. What am I saying? So we had a bullish overlay on the 11th. So that would have been Tuesday morning. And because of the trade management rules on that, it was a winner. It was about 0.4% winner. And with the rollover on the top boundary, trading the bounce off of that, it was a full percent overlay on that one. So a couple of overlays that worked out on these sideways pairs. GBP CAD, last week's candle ringing that preceding low. So yes, we have had that breakout as we discussed over the last couple of weeks. But we did see this bearish impulse wave come to an end. So it is in a retracement wave on the weekly time frame. So before we can look to trade this on the daily impulse, we need to have reason to believe that this retracement wave is over and it needs to stay outside of the channel. It would also, if it did, let me just go back to that. If it did roll over here, of course, this would also be a valid M pattern with an outside C close. On the daily time frame, it just managed to survive from a cyclicity point of view because it's failed to close above the previous wave high. But it's really looking very weak at the moment. So our previous trades have all been H4 impulses, I think. So this on the Okay, that was the previous week. We spoke about that. So we haven't had anything else on this one. I'm just, yeah, okay. Because we're in that retracement wave, that bearish impulse candle on daily was not relevant to us. So, yeah, nothing doing there. Also, a lot of the folks have used up their risk budget, so there might not be trades. You might not have enough risk budget for more trades in any case. All right, GBP Aussie flat here on weekly. We did have that bullish impulse candle on weekly, which looks like this on daily breakout from our 4-wave channel. Absolutely. That being on Wednesday, you can see how it bounced off that resistance level that came after that, but we still looked to take a trade here on an H4 impulse. It was a very nice reward to risk ratio, but sadly it didn't work out. So that's the end of that one. We can't do another one right now because obviously Friday ringed that high, which means we're in a bearish retracement wave. But should this low get ringed today, then from tomorrow, we could look to start trading this after a pullback in a bullish direction again. So this story is not over. Let's have a look tomorrow morning to see what happens there. And the last of the GBP crosses on weekly, regardless of what's happening this week, which is only a few hours old. Last week, we just had that bullish candle come up. We had taken a bearish overlay, which clearly got stopped out. Tested that resistance level last week, but closed back inside. And looks like this on the daily time frame. And again on Wednesday, you can see we did get that outside close. We also had a nice bullish overlay, which made up for our overlay on weekly that hit take profit on this one, although it wasn't the full profit, unfortunately. But that did close outside of our 4-wave channel on that day, but there was not a single setup for us to go long on this after that. So by the time we did get a bullish impulse candle, and technically this was one, it was the following day, and it had shown us that this bullish wave was over, and it was back inside of the channel, which, remember, invalidates the thing altogether. Okay, moving on to CAD Swiss on weekly. So very much still in a potential impulse wave here of a bullish trend. Obviously, we had a very long extended bullish move here, as we know, on a weekly time frame. We haven't had an impulse candle for 2 weeks in a row now. Both of these high tests, which of course will signify weak cyclicity on daily, which you can see here very clearly. So much as it did come outside again on Wednesday and close outside of that channel, it pulled back almost immediately on the following day. So that being said, because we have reason to believe we are in a trend and B, an impulse wave of that trend, this was another setup for us to potentially go long on a daily impulse. The reason why I don't think I have one shown here is because we had one from previous that hit take profit on that breakout day on Wednesday. And remember, we don't just jump into these willy-nilly, we wait for a pullback, which is currently what we are in. So I would say that if we do get another bullish impulse candle over here, that conforms to the rules for our daily impulse, as I'm sure you will agree with me. We've seen some of these weak markets not working out, like the euro yen, whereas here we've actually just had one trade, but it worked out perfectly fine. So despite the fact that it's showing that weak cyclicity on daily. Aussie Swiss, nothing at all. Very gentle bearish movements. Last week's candle being an bearish engulfing, and also an impulse candle, but we're deep inside of the channel. There's nothing here for us pretty much at all. So not really interested in that on a weekly time frame. However, that bearish impulse candle on weekly looks like this on daily. And yes, we are outside of both of our 3 and 4 wave channels. So with Thursday's outside close, we started looking at this on Friday. And as you can see, we did get into a bearish H4 impulse. But it got stopped out during the course of Friday for a very small loss. That was the original risk, and we ended up taking a small loser on that one. But bearing in mind that technically this is still a bearish impulse wave of a bearish trend. We are still outside of that channel. So if you were looking to get into another one, then you would have potentially done that this morning. So that first candle being an impulse, bearish impulse candle, and assuming a similar ATR or the same, you'd be in that already, and in 25 minutes time, assuming that we get another lower close, and I'm not saying we will, but just for training purposes here, it'll look like that. You'll be able to start trailing your stop using the 3-6 rule. So no idea whether it'll work out or not, but that certainly is valid, assuming you've got significant or sufficient, I should say, risk budget. Right, the Aussie Cad, here's that Canadian dollar strength again that we mentioned earlier on daily, but if you look at it on weekly, likewise, we discussed this before in terms of WM pattern. So although we are inside of our HDC channel, if you were trading this with the WM patterns, or if you were combining HDC with LPO, then absolutely trending and bearish impulse wave of that trend. Last week's candle just being a continuation of that. And that's what it looks like, obviously, on weekly. So if you were looking to trade this using daily impulse, the problem we had here was the size of this bearish impulse candle and therefore wave. So you'll recall that we like to get into these trades using or waiting for a pullback. That kind of shows us that this bearish wave is way too far advanced for us to be able to look to jump into it there. So we avoided taking that one. It's a pity. I mean, if we'd had a bearish impulse candle, let's say on, was that Tuesday, this little bullish wave, absolutely, that would have been perfect, and it would have been a nice daily impulse for us to jump into. But we avoided looking or taking that one. However, of course, if you look at today, if we are currently in a nice little pullback and we do get a bearish impulse candle, absolutely, it's a for a way for the daily impulse. And of course, we don't mind so much missing out on that because we are able to also trade our lower time frame H4 impulse. And we got a nice little trade here on the 12th after we saw that resumption in that bearish move. Nice little bearish impulse candle here between closing out at 4 a.m. on the 12th. And that went straight to take profit. If you're using standard targeting and if you're using advanced targeting, you scooped a good, I'd say 60 to 70% extra in terms of your targeted profit. It was followed by another one which did not work out, unfortunately. And you can see here how this bullish cyclicity started establishing itself Thursday into Friday. Going back to daily, however, as soon as we have reason to believe that this retracement wave is over, that retracement wave is what led to this bearish trend, this trade getting stopped out, which, by the way, had a very nice reward to risk ratio. I could take those all day long and lose 3 out of 4. It'd still be nicely profitable. But if we have reason to believe that this retracement wave on daily is over, then it's a for a way to trade this again in a bearish direction. So just looking to see if that does happen. Aussie Kiwi, nothing on a weekly, although we do have an overlay that we would have triggered this morning. So looking for that on the weekly time frame, and on daily, that's what it looks like. Pretty pathetic, really. So we, I think, spoke about this overlay in last week's Monday morning market review, which hit the take profit. Actually, it was during the course of Monday, I think, or maybe Monday's open. Right, otherwise nothing for us to do there. Kiwi Swiss, very flat on weekly, very flat on daily. There's absolutely nothing there for us to do. Pretty pedestrian, really. Kiwi Cad, however, similar picture to Aussie Cad. So there's the LPO again. We've discussed this in our previous training. Valid M pattern. The only thing that we don't have, of course, is the HDC channel breakout. Similar picture with that very extended bearish impulse candle, which really, as you can see in hindsight, that wave was over. This came back on Friday. Let's see, we closed at 76 with a low 74. So it did just close inside. But as far as I'm concerned, being a channel trader, especially if I have reason to believe that this retracement wave is over, then I could easily drop down to the H4 time frame and trade it there. So anyone who was trading this one on the H4, see, I didn't have any analysis there. Because remember, once we have reason to believe that we're in the next bearish wave of a trend, you would have potentially had 1 or 2 trades going here to short the market, which we might have discussed before. But certainly, if you hadn't already gotten into a trade somewhere around here, you would have done it there with that bearish impulse candle, and there would have also been a nice H4 winner for you on that one. And folks, that is it. Those are our currency pairs. If you're also trading gold, you'd be trading that in a bullish direction as well, and there's been quite a few nice winners on that. But this being our an evaluation account of our funded accounts, we don't have a feed for gold. Well done to those of you who have succeeded on the funded account evaluation stage, moving into your portfolio manager levels. So this trader is almost there as well. So folks, it's absolutely doable. Be patient with yourselves. Just follow the rules. Obviously, every day is a learning day when it comes to trading. You need to make conscious steps in the direction of progress in your trading knowledge and experience. Learn how to execute consistently above all, and nothing can stop you. All right, folks. I don't see any other questions. David, we'll have to discuss that separately. Anyone got any questions specific to our Monday morning market review? If you've got any login questions, please contact Kareem at support@gptacademy.com. All right, folks, and if you're watching this as a recording, please remember, if you do have any questions, please do drop them into the comments below. All right, folks, you have an absolutely great week further. Look out for announcements on any trading that we're going to be doing during the week. And I'll chat to you then. Bye for now.